You probably watched the YouTube video, and I covered a lot about the cable market, and I'll fill in the gaps that wasn't presented there. But if you look at a 15-minute time frame, you can see we have a BISI in here, buy side imbalance, sell side inefficiency. That's one single candle. Let me zoom in, and I'll go one more time. So you have one single candle here where it moved up, and inside that little range where one single candle passed on the upside, we want to see price come down and rebalance. All of this price structure here, once it started to rally, all of this is being supported all of this price action is being held up by this one single candle. Okay? Too much weight, and it's going to break and come back down and fill in that little area. And it did that and returned back to a bullish order block, ran equal lows. All of this is the mirror image of what we would expect to see in the dollar index. So in here, we're going to zoom back in and look at the start of the day. All right, so we had in Asia, we ran up, ran out buy stops, dropped a little bit lower, came back up one more time, just bumped the high. The high here, 110.54, and the high here is 110.55. That's all it takes to upset, because that wick is going to be different across all brokerage firms. Whatever your liquidity pool is through your broker, that's how far the wick will go, because everybody's orders are going to be slightly different, and their wick on all of their platforms on different brokerage. For instance, you may have, I mentioned this before in previous lessons, where you have live account server 122, live account server 124, 126, and so on. Why can't they just put it all in one? Because they're going to go after the liquidity that's available in these smaller pools of liquidity. Okay, and you can get mad at all you want. It doesn't change anything. Okay, you're not going to change the industry because you're getting angry. You just have to be mindful that that's what's most likely going to happen. So you have to be aware of how much they may wick it through. Now, obviously, this candle's high shouldn't be like running up above here. If you see that on your charts, then you probably have a really bad broker and you need to get out of there. But running this old high here, yeah, could it happen? Yeah, I would still probably want to leave them if they're running this high here. Now, if they're running this one here with a variance of 5 pips or 7 pips, to me, it stinks. But unfortunately, that's about normal. Once we had that run here, price broke down and created a fair value gap. Now I'm going to zoom in and see multiple areas where I participated today. Now, hopefully you guys can allow me the liberty, okay, I think I've earned it, to tell you what I've done. Now, I know some of you want to sit down and watch me go over the whole entire thing and fine-tooth comb everything I'm doing in that account. I'm not doing that, and I never promised that. Okay, so don't get upset, and don't send me emails, and don't send me any tweets, because all you're going to do is offend me because I told you nothing about or promised to do that at all. I'm giving you the ideas that were in my mind at the time and why I executed. Okay. The market showed displacement. We broke below this low here and created a fair value gap. Market came up right in there. I sold short. This was the only drawdown I absorbed, and then the market rolled lower. Create a small little consolidation in here. No imbalance to work with. It's just expansion on the downside. Small little fair value gap that just recently traded into it here. In a lower 5-minute time frame, you're going to see the fair value gap in here that I went short on, and I went short on a fair value gap in here as well for the final run down into the order block. And let's do that now. I will highlight the areas here so you can see inside of these ranges, and the other one is in here. We have this candle's low and this candle's high. That was the fair value gap I traded on, and my stop was above this high here. So I had a little bit of heat on me here, not much. It wasn't very much at all, about 3.5, 4 pips at most, and then rolled over into the objective. Now, this in itself is enough for your weekly haul. It's hard to believe that this is all you would need, because you look at all this and you think, man, I want to have all that. But you only need this movement here to run into the order block. That's a model. That's a setup. We have a volume imbalance in here. I was almost tempted to get in here, but we were so close to the order block, it wasn't worth taking the new entry on. But notice there's no bodies in here. It's just the wicks. Rebalance and then slammed into the order block. Okay. There was a fair value gap in here that I watched but did not participate in. That would have been another area. I could have went and you could have went, but I didn't. And I just kept adding. So that was the largest position I had. And then that last portion today on the dollar CAD, which I'll look at in a minute. We go out to a hourly chart. I want you to look at the BISI that's here, very clear. We traded down into that, so price was drawn out of this range down. Why did it have this movement? Because of the bullishness of the dollar index. So if the dollar index was bullish relative to its daily chart, let's go back for a minute. We were in here. Yesterday we had a small inside day. Inside day is a day that has a high that was lower than the previous day's high, and the low is higher than the previous day's low. So it's a very small little range. Okay, when that happens, usually there's a volatility expansion where it just moves, has a very large range, or it begins a series of large range days. We have the large range day appear after the inside day. Okay, this is something that Larry Williams taught a lot about, and Toby Crable, he has a book, Trading the Opening Range Breakout or something like that. Really old book. It's hard to get your hands on. It's very expensive, but you can find PDF files of it on the internet. It talks about narrow range days too, and smallest range in the last 7 days. All those things were also talked about in Street Smart's book by Linda Rasch and Larry Connors, which I do believe still is a essential read for traders. You can get that on Amazon. They've dropped the price from $175. I think it's like 100, and don't quote me, I think it's like $120 now. But again, it's really, really good because it talks about a lot of specific signatures that repeat in price action. Not IPTA signatures, but signatures nonetheless. The things that they're very generic about how price usually moves. So we had a lot of factors here leading to this area here. We also have a breaker. This movement here and then going lower. Here's another breaker, so that's another level. Should this roll down? Okay, in other words, say we get that dollar to continue going higher. Well, this could roll over, and the next area we're watching is this breaker here. It's this specific candle here, the high. So at 109.75. So that's the next downside level that I'd be interested in going forward. And it's also overlapping with this down close candle, which is a bullish order block. Should that break and give way, the relative equal lows would be the next draw. I am not convinced at this moment that we have made the high of the week yet because of ECB. ECB and FOMC, those weeks, I just don't trust my weekly high and low. I'm always flexible in allowing the market to show me that that hasn't been the case, and they're going to make a higher high or a lower low for the week. So I think this is a very suspect high at the moment. Now, obviously what changes that is what we see in the marketplace tomorrow ahead of ECB, and then right as ECB is announced. But downside, okay, I'm looking at this breaker. On the upside, I'm looking above this high. So even though we've traded lower, this is nothing. Okay, this is absolutely nothing. This could be completely eviscerated and blown out on the upside if they wanted to. So just be mindful. It can do a whole lot of movement really, really fast. And if you're in the wrong side and get offside on the marketplace, it can be painful. Cable, I'm going to zoom in here, leaving everything that I gave by way of the YouTube video. And the only things I'm going to pull out here is what makes this a bearish order block. Obviously, it's the imbalance here. We have this candle's high right here, and this candle's low right there. So the market comes back up, fills that in, There's your sell. That's your high probability bearish order block sell. And then rolls over. We have another fair value gap in here, and you can actually see me trading this one. Okay, you watch me trade it live inside this fair value gap. It trades up into it. I went short there, and it's expanded down. And I went through the whole business of explaining all that. This is a fair value gap in here. This candle's low, and this candle's high. That's what I actually traded on. But it was also a confluence of the breaker. So because of free level member students, it's worthwhile to mention that for them. It's their cookie. But what made it a high probability is the imbalance here, that fair value gap. And that was why I went short there. Everything was remains the same in terms of the downside objectives, the order blocks and the liquidity pools. And the return back up into here was simply the fact that we don't have any bodies. Okay, this is a volume imbalance. That fair value gap, even though we spiked up through, well, how did I know, ICT, how did you know it was going to come back up here and sell off again for a retest? Because of the volume imbalance. Okay, even though we had this here, it left it very thin. This happened real quick. It didn't stay there very long and came down and closed. Never went back up in there again. So this area in here creates a volume imbalance because of there's a lack of any bodies. Even though it doesn't create a body here, it trades up into it again multiple times. So that was the catalyst for that, not returning back to this one and also trading above the breaker. Now here's the thing that the new students and those of you who have been here for a couple months will or should appreciate. If this was all just simple support and resistance, because if I show these things on YouTube, I guarantee you there's going to be somebody in the comment section. They're going to say it's simple support and resistance. This is nothing. Okay. The problem with that is which levels down here are you going to put your horizontal line on and say that's the support turn resistance? Because it's spiking through all here. I'm giving you the reasons why it's going up here that support and resistance doesn't. You actually see me executing on these ideas when I show you the videos and how much precision is behind it. You get responsiveness. Boom. I get in, it's boom, the market goes in my favor. I get in, boom, the market moves in my favor. That's because I understand how IPTA is going to reprice. It's not support and resistance. Support and resistance is too myopic. It's too ambiguous. It's too wishy-washy. You don't know which level. And that's what separates what I'm doing and supply and demand, because those things are dealing with zones and a multitude of specific levels. Because if you look at this low here and price broke below it, why did it go all the way up to here? And why didn't it stop at this level when it came up to here? It went through it and then jammed all the way through it again. What's going on? It's order flow. The market's wanting to rebalance to run an efficiently delivered market. Has nothing to do with support and resistance, has nothing to do with supply and demand. The market is going back to these levels to reprice for fair value. That's it. Then it expands and seeks liquidity. External range liquidity. So this is internal range liquidity. This is internal range liquidity. This is internal range liquidity. Runs down to external range liquidity. External range liquidity rests below here. Okay. What's the other one here? Dollar CAD. Earlier, before I started the recording, I had put this vertical line in here. And I went away from the charts and came back and saw that blue line. And right away, I was like, whoa, this thing just took off.